Good afternoon and welcome to BizTech's Midday Market Watch. On a special edition of Midday Market Watch, we're going to take a look at REITs and tech stocks. And to bring his expertise into these key areas, our guest today is Gabriel Yap. He's the executive chairman of GCP Global. Gabriel, great to have you on the show again.
Happy Thanksgiving, Brian.
Yes, it's quiet in markets because of Thanksgiving. But Gabriel, you you focus on REITs a lot, and you're a big advocate of Singapore REITs in particular. But in a week's time, ESR-Sabena REIT merger goes to a vote. Now, could you share some salient points of this tussle between the managers of these two REITs, and at the same time, some of the shareholders who are opposing the merger?
Sure, Brian. As a matter of fact, it will be an epic showdown between two minority dissenting shareholders, that's Quas and Black Crane, versus the others in terms of voting for the acquisition or the merger to go through. I mean, of course, everybody is talking it as if it's a merger, but if you look at the terms and conditions, the accoutrements that actually comes together with it sounds and look more like an acquisition of Sabena by ESR. As a matter of fact,
Sabena is very much smaller anyway.
Indeed. I mean, it's not performed, and what in the crux essentially is what the managers, or rather the two fund managers, think that ESR should be paying at a market price for that based on the price to NAV. But if anything, Brian, I mean, theory is one thing, you love to get theoretical values, but in real life, life dish out to you the empirical or the real value. And as a matter of fact, this is actually exemplified in my upcoming book, which is Making Your Millions in REITs. So for your viewers, we will love to showcase our book, which will be due next month. But in our book, we have exemplified exactly the crux of this ESR issue. That is, fund managers, investors think that they can get theoretical price to book NAV or dividend yield in the market, even in merger situations like ESR and Sabena. But the key thing is that empirical evidence have shown that non-performing REITs like Sabena, which if you look at the share price has just been in a downtrend for the last 6 to 7 years, you will find that it is difficult to resurrect, an underperforming REIT, back up to the price NAV or even to market multiples in terms of dividend yield.
Now, Gabriel, in your opinion, what are the key reasons for the decline over the last few years of Sabena REIT? I think one of the things is obviously they have a critical size issue as well.
Critical size is one thing, but it really boils down to 6 to 7 years back when it was, and it actually hasn't been managed to the expectations of many shareholders. I think essentially it came to a boiling point where shareholders basically dissent pertaining to 3 particular acquisitions, which were spoon-fed by the then sponsor. The then sponsor was actually Freight Link, which is another listed company. I think shareholders find it almost difficult to actually look at the acquisitions in terms of the value, and therefore actually voted that down. In that regards, essentially, the perception of ESR, the perception of Sabena henceforth has actually taken a big toll. Now, the key thing, in Prime that I've emphasized in my book over and over again, as well as our various REITs classes that we teach, is that perception of REIT is one important thing. Now, the other thing, of course, is the asset value. Now, first and foremost, investors buy into REITs because of the value of the REIT, plus the added services that the manager can bring in to the table, as well as basically how the strength of the sponsor. In this case, Sabena REITs lacks all of this.
And so this is the reason. But what if that is the case? What does ESR see in Sabena REIT?
Oh, it's simple mathematics, Brian. I mean, if ESR can get Sabena, or any REIT can buy another REIT at 20% discount to the NAV, that means on a per asset alone, that's a great value. Of course, that's where, ESR then hope that it's better management will come forth into play, as well as basically the value of its sponsor, that is the ESR group that's listed in Hong Kong.
Now, overall, REITs are looking more and more attractive to investors who are looking for steady dividend, especially now, Gabriel, in a time when interest rates are zero or negative globally. What are the 3 REITs that you would recommend to someone to add to their portfolios currently?
Well, Brian, I have been a major top 20 shareholder of Fernandez Trust since its listing way back in 2006. Yeah, it's 14 years already, very fast. See, so
Wow.
I continue to remain as one of the top 20 shareholders. So naturally, Fraser Centrepoint Trust would be one of our peak. As a matter of fact, in our classes, we have highlighted Fraser Centrepoint Trust for the longest time, and the share price have actually more than doubled. In fact, it's tripled. And not forgetting that the yearly dividend that you used to get is between 6 to 8%. So if you incorporated that in, then the percentage gained since its IPO is about 300%. The other 2 REITs that we have highlighted in our various classes as we went along, are basically Ascendus REIT as well as Maple Tree Logistics Trust, simply because the phenomena of work from home, even if you actually have a vaccine to be found, which I hope certainly will happen, Brian, hopefully before Christmas, so that all of us can really enjoy
I don't know about that.
in Chinese New Year, is the fact that, the switch, whether it's actually COVID-19 or not, the digitalization process, 5G, it's going to be the invoke, so e-commerce is driving the space for industrial spaces. So that's where Ascendus and Maple Tree Logistics is well positioned. And that's the basis of what we have been teaching in our classes. I mean, these 2 share prices have remained solid, rock solid, throughout this year. In fact, they have actually gained close to about 30% since our recommendation, but we still continue to remain adherents and believers on these 2 particular, or this particular 3 stocks. So in conclusion, it's Fraser Centrepoint Trust, Ascendus REIT, right, and Maple Tree Logistics Trust.
But
yes,
these 3 stocks have run up quite a bit as investors, as I said, looking for stable returns. Is there still an upside then in the next couple of months? Or should we wait to buy on dips?
Well, the inherent reason why investors go for REITs is because of its stable return. You see, that is actually theory, but as my book actually points out, Brian, in actual fact, when you look at the trading volumes, you look at basically the momentum of those REITs that have done well, they are a combination of the ability to deliver stable dividends, plus that fact that the value of the sponsor can bring onto the market. So if a sponsor like Ascendus Group, in this case, the parent company now is Capital Land, and Maple Tree Logistics, of course, the parent is Maple Tree, continue to dish out acquisitions worth $1 billion every year for it to expand. For example, Ascendus REIT has grown from 5 billion to now 13 billion. Can you just imagine that, Brian? In less than 5 years, then investors gets aroused, and love this kind of concept. So you actually have a case of dividend plus growth in these 3 concept stocks.
Right. All right, that's interesting. Now you brought up the key trend now, digitalization and work from home, and institutional investors have, the tech stocks have been the darling of institutions as well as retail investors. But they're now starting to switch out institutional investors out of tech stocks into value and cyclical stocks. Now, if I wanted to get into, or our listeners want to get into China tech stocks, an area which you are familiar with as well, what 5 stocks would you recommend that we look at?
Well, let me just share with you what we have shared in our last few investment classes in technology. Actually, the next one is tomorrow. So if your viewers want to sign up, just go to GCP Global website to sign up. One of the key things on China is the concept of digitalization. So in the last few months alone, we have companies that we have highlighted in our classes like Pinduoduo. The trading code or ticker code is PDD. Or Meituan Tianping. Now it's renamed as Meituan. The trading code is 3690.0 HK. Now, these three stocks have amazed, or rather, these two stocks have amazingly doubled in the last 2 months alone, based on the last set of quarterly set of results, where the MAUs, the DAU, and the TAM have increased. Well, DAU is the daily average user, MAU is the monthly average user. They have actually beaten market hands down. So this is our love-hate relationship with this e-commerce stocks in China. The ones that we talk about in our previous class, when we highlighted electric vehicles, the like of Li, Li is the ticker code, NIO, the ticker code is NIO, Xpeng, the ticker code is XPEV, have shot up through the roof. They are like up to 150% in the last 2 months since we highlighted that in our class. So for more on which stocks that are going to run, do attend our class tomorrow. But for example, our tomorrow's class, we are highlighting the other two sectors which we think will do very well. That's 5G and cloud computing in China. So which are the better e-commerce stocks or the 5G stocks, to delve in? That's where we're going to cover. The other thing that we are very, very excited about is esports. Esports is actually a growing phenomenon. It's tripling in terms of revenue in China as well as global worldwide. So the best
the place to invest in esports.
Yeah, so that's where we're going to cover in detail, because essentially we feel that it's more important that in a classroom environment where we share with you the underlying basis of the optimism, what are the things to follow, and so that at least people will know that at GCP Global, we teach you a systematic way of making money, not only once, not only twice, but consistently for the last 31 years.
Hey, Gabriel, thank you very much for coming on the show. We've been speaking to Gabriel Yap. He's the Executive Chairman of GCP Global on BizTech's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia.